please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome to Bazaar Morning Call. I'm Lata, with me Anuj and Sonia, and we had such a great India Rising Summit on Friday and Saturday. We're going to get you excerpts of that. Definitely left you cheerful and with, of course, a lot of very intelligent questions both on polity and economy. We'll lay out the rich conversation that we had on so many issues as the day goes by. Where are we in terms of political questioning? How does the ruling party look at the current TDP walkout as well as the by-polls? You will get that very interesting chat with Rajnath Singh. And of course, economy and markets. Is trade really rolling off? Paul Krugman put certain things in perspective that, globalization was not what it was in the 90s. Yeah. That was an aberration. And, let's not, he put trade wars in perspective and, how much trade volume can really go down. Also, his the view of President Trump is very interesting. Calls him a spoilt brat who has only worked for his father. Very interesting things happened in the India Rising Summit, and we'll get you all that. But let's come to the markets. There was a lot of the market fell. So let's start off over there. The fact that the markets ended at almost the lowest point of the day was a bit of worry that several important market guys at the summit also pointed out. But I just want to put one positive on the table, which did not get attention on Friday because it came so late in the day. That the current account deficit was expected to be closer to 2.4, 2.5%. Now, RBI's threshold to panic or worry, not panic, worry, is 2.5, 2.6. And it was expected it would come in at 2.4. It came at 2. So that's the positive. Indian macros, fiscal deficit, current account deficit, no. Current account deficit is not a worry now.
Okay. Well, that's good to hear, right? I'm also very interested to hear what Ruchir Sharma had to say because, India has grossly underperformed all emerging markets this year. I mean, the Nifty is down, 3% for the year, while markets like Brazil, Russia are all up 9, 12%. Okay. So that's what I want to hear.
Anuj, but there's just one point I want to say, and that was very positive from Ruchir Sharma. He said India is an inherent momentum. We will be 6 to 7% irrespective of the political formation. But anyway, first I want to hear about markets.
Okay, sure. Of course, we'll go across to Anuj for that because we need to know what to do here and now, right? I mean, not for the year as a whole. Anuj, morning. This 200-day moving average, that's something that everyone is now talking about. Does it get breached in the near term? Does it stay there? What's the sense you're getting after all the kind of selling pressure that we saw all of last week?
Yeah, morning, Sonia. But, before that, forget about Ruchir. I think I was really taken away by what Kangana had to say, and frankly for me, she is really, I mean, the rock star, and as she said, I am the cool youngster of 21st century. And as long as we have people who are willing to say that, whether it's politically correct or not, I think we have great future. So that way, I was very thrilled by what she had to say. But look, the market, it's interesting. Friday, I reckon, was really ugly day because after a long time I've seen this kind of selling by the FIIs. I'm not even talking about the cash market. In futures market, they sold 2,200 crores in the market. Okay, let's first talk about the levels. Okay, let's talk about the levels first. The 200-day moving average is 10,161, which is where we are almost now. And if we have a gap down, which looks likely, then we will start there. The March 2018 and 2018 low is 10,141. Look, this is the zone. Even if you're a short trader, my sense is that some of the smart short traders may want to just unwind their positions now and let some of the weak bears now enter, and they may not get too much traction now. If you're shorting now at 200-day moving average and also at 2018 lows, perhaps you do not get enough traction. Closing today is going to be important, between 230 to 330. 10,154 so far is a closing low. If you close below that, in that case, definitely over the next few days, there is going to be some weakness. But as I said, quite a bit of selling by FIs, 2,200 crores, 29,000 shorts added in the system. Overall, the short exposure is now 54% from the FIIs. So if they don't get follow through, perhaps there's some short covering. But one thing is certain that, the kind of selling that you've seen from FIIs, this is not just for playing for 100, 200 point move. This is playing for a decent correction, and that is now tying in with what's happening globally as well. So the point last week was that just based on our cues, perhaps you have hit the bottom at around 10,150, the 200-day moving average. But if global cues also start to deteriorate, in that case, there's a bit of a double negative. I just want to make a point here, though. All through 2017, a lot of investors thought, there's no buying opportunity. If your belief is this is a bull market and bull market correction, the best time to buy and make portfolios is during correction and not while the market is surging.
I also have a question for both of you. In fact, what is the genesis of this fall? Because as we were mentioning, the global emerging markets have done well and our market has fallen. Does it have anything to do with the political outcome, and is that a fear that the market is starting to price in now?
Market will always price in something before it happens.
It happens,
but,
exactly.
Like the market was going up last year, there are excesses. Market normally, trades at a mean. There's a mean, reversion to mean in terms of price to earnings. There are times when the market goes up and, just breaches past that, and there are times when the market goes below that. It's, all...
So it's just correcting the excesses, basically.
What is market ultimately? You have to take advantage of the excesses on both sides. And that's, I think one excess happened perhaps in 2017 on the upside, now perhaps on the downside.
No, I don't think the market falls. We give the reasons. Yeah. So it's difficult to say why. It's possibly a mix of, the political happenings as well as the bank crunch.
Yes.
Every speaker spoke about it, and it was a large part of what Ruchir spoke as well. Because as you look at the papers today, you're detecting frauds. The frauds were there. These are all old frauds actually getting reported. But there is a bit of a worry that people will become more cautious while lending. So what is only a PSU bank or a corporate lending problem could have some repercussions, echoes in the economy as well in terms of maybe crunched lending. All that is definitely a worry on the market. Banks are a worry. And maybe politics is a worry. But I just want to say that in the midst of all this, just get those current account deficit numbers. I mean, I want to put one thing on the table. What led to that large trade deficits is actually crude. Yeah. That's why we were getting wider, and that's one reason at least why we were getting wider and wider deficit. But what we realized when the current account deficit numbers comes is that when the world grows faster and the Middle East grows faster because of crude, Indians also remit more money back, and that's what happened in the current account.
Okay.
Current account is trade deficit plus invisibles, the other money that comes in. The money that has come in from Indians living abroad used to be around 14-15 billion a quarter. This time it is 16.2 billion.
Okay.
And likewise, software exports normally average 16 to 17 billion. This time it is over 18 billion. So as the world grows, Indians are making more money because of that. And since India is not a great merchandise manufacturing exporter, it's more a software exporter, services exporter, that made the current account deficit look smaller.
Better.
So, I mean, for me, I think the market should take in this positive.
Okay, and we also, by the way, forgot to wish all our viewers a very happy Gudi Padwa, happy Ugadi. So it's the start of a new year, right? New tidings, hopefully, for the stock markets as well.
And more to you. I mean, of the three of us, you are the one, I guess, who celebrates Ugadi at home. Our New Years are a little different, but yes, happy New Year to you and everyone.
All right. On that note, let's kickstart the show and tell you what our wise experts have to say as we head into trade this morning. Lawrence Belanco of CLSA gives us a view on the index. He says for the Nifty, support provided by the 200 DMA and the December lows at the 10,036 to 10,168 area remains critical to sustain the uptrend. He says last week's test and rebound of this support zone reinforces the significance of this support zone and maintains the current uptrend. On the upside, he adds, initial resistance is provided by the 50-day moving average and the 27th February high at 10,608 to 10,639. From a long-term perspective, Lawrence says April 2017's breakout from the 2015 to 2017 consolidation pattern supports an upside target around the 12,000 area.
Okay, and now to a fundamental call from CLSA. Mahesh Nandurkar says the housing cycle has started showing some green shoots, which can be gauged from cement demand, developer pre-sales and the government's affordable housing program. Those are the signs. He says the PMAY, that's Pradhan Mantri Awas Yojana urban program, is shifting from announcements to execution mode with nearly 2 million housing starts, significant budget raises and recent order wins by large contractors. CLSA's base case remains that a combination of improved affordability and government support should drive the housing cycle improvement through 2018. Their top buy ideas on the theme are Godrej Properties, Sobha, Ramco Cements and Supreme Industries.
Okay, let's get you some money market views because this week is important. We have the FOMC policy that comes up as well. And the rupee, in fact, closed flat against the dollar last week on Friday, but the bond yields hit a one-month low. So here's what you can expect today. Pramit Brahmabhat of Veracity says, looking at the weakness in the domestic equity markets, he expects the rupee to depreciate for the day. He says the trading range for the dollar INR is seen between 64.80 to 65.20.
And Ajay Manglunia of Edelweiss says, gilts have rallied sharply post the softer inflation reading and easing of US Treasury yields, but participants would be wary of profit-taking, as has been the case with recent rallies. Says the positive bias is expected to continue and gains can increase if buying momentum persists. He says there might be some volatility in trading and the 10-year benchmark bond yield is likely to trade in a range of 7.5 to 7.6. That would be very good if it did that.
Okay, over to Nigel then for the world view.
Well, in Friday's trading session, the U.S. markets did end in the green, but for the week itself, we had the Dow as well as the S&P 500. They ended with cuts of around 1% to around 1.5%. The Nasdaq, though, for the week ended more or less flattish. Now, in Friday's trading session, well, we got a couple of data points that came out of there. So the Commerce Department said that the housing starts did see a bit of a decline. The building permits as well were down. If you take a look at both those data points, you'll see it's disappointing. But the bigger focus really was on consumer data that did come out of there. So we had the consumer sentiment data. That looked the best since we've seen in the last 14 years odd. And in fact, we also had the Labour Department. They came out with some stats for January. The total jobs available, in fact, did jump up. So both those two data points looked very, very good. The biggest skew, though, this week is going to be the FOMC meet. Jerome Powell, his first FOMC meeting. The street is factoring in a rate hike. But in fact, the verdict is still out whether or not we get 4 rate hikes in this year. Shifting focus to Europe, then all the three frontliners, yes, they ended in the green. We had some data points coming out of there. The consumer inflation data, it did rise up, but not as much as is expected. Oil and gas was the best performer in Friday's trading session on the back of a bit of a bump up that we saw in Brent crude prices. But peripheral European markets, they did very, very well. The Italian index, the Spanish index, as well as the Ukraine index, that's the one that we don't talk about very, very often. Green on the screen. This morning, Asian markets, they started off in the red, though they're off the low point of the day. All those markets have recovered considerably from its lows. And that would mean the SGX Nifty would start off in the red, but SGX Nifty as well at one point of time was indicating a 50-point downtake. Back to you all.
Okay, thanks, Nigel. I just wanted to say, Anuj, as you always point out that it's best to go long into a Fed meeting. But now it's a new Fed chairman, so I don't know if that theory will work.
Oh yes, new president, new Fed chairman.
New president and new chairman, so we don't know.
Okay, but something is still old, right? Over the weekend, you had Vladimir Putin that overwhelmingly won another 6 years as the Russian leader. So there's something that still continues to stay as a tradition. But over the weekend, we also had a host of important political, economic, sports and entertainment leaders gathered at Network 18's India Rising Summit. Ruchir Sharma of Morgan Stanley Investment Management, who spoke to Shireen, says the importance of politics on Indian economy and markets is exaggerated. He adds that India needs to focus on low-end manufacturing the most. Listen in.
Last year, 7,000 millionaires left this country, the largest number in recent times. The year before that, it was 4,000. So the number is going up of the number of millionaires leaving this country. Foreign investment is important, but it's really domestic sort of participation, domestic investors who sort of make a nation going forward. So I think that, to me, this has to be really sort of looked into, that why are so many millionaires leaving this country? And if you're happy about it because you think this is part of the anti-corruption drive, fair enough. But when the number is the highest in the world, at least as a share of total millionaires leaving the country, that should be a cause for concern. The importance of politics in the Indian context is way exaggerated. So I love following politics. I travel every time there's a major election in India. I spend a week traveling with a band of people to figure out what really is happening in that election. It's fascinating. But one thing I've learned over the years is that do not draw any inference from the election results on what's going to happen to the economy or to the markets. And the markets is very interesting. That we think of markets as this sort of very efficient beast. The markets have always been, the Indian market has always been wrong, at least initially, about the politics. there's not been enough thought given to it in terms of that. Why is it that in India, the default option is throw the bums out, right? So like in India, we keep thinking that what will the politicians do? What will the government do, and what is the Congress party doing, etc. I think the single biggest reason why those 2/3 of politicians in India lose power is because the state is broken. And I really believe this, which is that the average person sort of interfaces with, let's say, the local police person, the local tehsildar, the municipality person, the local bureaucrat.
Yeah.
And his or her interface with that is extremely harsh. We are seeing 40 countries in the world where the working age population is shrinking, or close to that, including China, including Japan, including Italy, including Germany. So that is a major headwind to economic growth, because you just don't have enough people there. So that's one of the ironies that we sort of speak about, that we speak here about an employment crisis or whatever is going on. Across the developed world today, unemployment is at a 40-year low. 40-year low. And even globally, when we look at it, since we have data over the last couple of decades, this is the lowest unemployment rate that the world has seen. So everywhere, in fact, there are jobs, 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 because of the demographic shift that we have seen across the world. You heard a bit of it in terms of the Koreas, Taiwans, Japan, China. They all had this, their key to success was all the same thing, which is they all exported their way to prosperity.
Yeah.
Right? So which is that, and they exported their way to prosperity by producing low-end manufacturing goods. The focus has to be on low-end manufacturing. It sounds a bit unsexy, you know, because we all want to talk about technological prowess and do very high-end manufacturing and stuff. That's just not the formula.
Okay, not too worried about the politics, but more worried about what's happening with manufacturing and with economic growth, etc. That's the word coming in from Ruchir Sharma. You'll get to hear all of this through the course of the day, but for now, let's take a short break. When we come back on the other side, CNBC TV18's top 10 list of stocks to watch. Stay with us.
भारत ने अपने साथ ही पूरी दुनिया की इकोनॉमिक ग्रोथ को मजबूती दी है। जो देश वर्ल्ड जीडीपी का केवल 3% हिस्सा है, वो आज वर्ल्ड इकोनॉमी की ग्रोथ में 7 गुना ज्यादा कंट्रीब्यूट कर रहा है। जितने भी मैक्रो इकोनॉमिक पैरामीटर हैं, इन्फ्लेशन, करंट अकाउंट डेफिसिट, फिस्कल डेफिसिट, जीडीपी ग्रोथ, इंटरेस्ट रेट, एफडीआई इनफ्लो, भारत सभी में.
Global markets have not had it good last week. In fact, most of the US markets were down more than 1% for the week. For today, the SGX Nifty is flat with a bit of a negative bias, but we've been underperforming all of those markets as well. So let's see whether we can at least hold on to some support levels or not. Our research team is here to give you the list of top 10 stocks to watch as we head into the trading day. So let's welcome them. Anuj, what are you looking at?
So, Sonia, it's could be a very volatile day today. Both sided moves are possible, so perhaps there would be longs and shorts, both possible. Hindustan Unilever, big buying in last hour in futures on that stock. There was big premium. The stock was down a bit, but the futures premium surged, and the defensive stocks may outperform in a market like this. And on the downside, perhaps in Adani Enterprises, among the weakest stocks, in danger of breaking the 200-day moving average. It's in a bear market of its own after that huge rally. So that could be an interesting one.
Okay. Yes, trouble for Adani Group stocks perhaps. Mangalam, you want to speak about the order wins by various infra companies?
That's right, Lata. So, you know, the last month of this fiscal ordering activity usually picks up. So, we have got some announcements come by. Ashoka Buildcon, for instance, has been declared as the lowest bidder for NHAI's project worth about 1,700 crore rupees. Positive news for that. PNC Infra, they've actually backed the project. Aligarh Kanpur Package 2 project for about 1,200 crore rupees. So, positive news there as well. And Sadbhav Infra, they've emerged as the lowest bidder for a part of the Gujarat highway project from NHAI worth about 1,311 crores. So these three companies could be buzzing in the green.
Okay, Mangalam, thanks a lot for that. But Lata, this is again front page story on banks. This was sort of known, right?
Yeah, it's an old story actually, and Axis also had spoken about it, had registered the complaint some time back. My own sense is, I mean, we are referring to Axis Bank's complaint against Parekh Aluminex promoters for fraud and cheating. It's a 4,000 crore loan, and Axis and a whole host of some 20 banks have exposure to this. It's an old story, and I'm sure it's been declared NPA not just by Axis but by a host of the other banks as well. But it just puts on the table the fact that banks are now eager to ensure that frauds are chased, and therefore this overhang will keep hitting you. And on PSU banks, I just wanted to say this, that on Friday again, it was on hopes of forbearance on various grounds, either MTM or NPA, that the stocks seem to be outperforming. That didn't come till end of day, till end of week. So, you know, some money could be taken off the table if the market is in an overall bad mood.
Okay. Well, by the way, you know, Mangalam was telling us about all those order wins. I also wanted to add IRB to that list. Yes, they've gotten, they've become the preferred bidder for a 2,000 crore Gujarat project order. So just keep that stock on your radar as well, IRB Infra. But moving on, Fortis is back in the news. It just refuses to get out of the news, right? Ekta is here to give us the latest there. Ekta?
Well, yes, absolutely. You know, today Fortis is in focus because there are reports indicating that the activist investor, Elliott Management, which is New York based, is eyeing Fortis, and reports indicate that they have begun buying shares. They're talking to Fortis creditors. Remember that this particular activist fund manages around $40 billion in assets, and they're known to play significant roles which have led to significant regime changes, etc. So this would be an interesting story to focus on. We haven't independently verified the report, but what you can deduce is that there is probably multiple people who are interested in Fortis at this point, and a bidding war could be something that you know, couldn't be out of speculation either at this stage.
Okay, well, that could be a positive also for Yes Bank, because they're looking to sell shares, as it was clear from last week's data. Sonal, you're watching for Zee Entertainment, very important developments there, and ENIL as well.
Well, I'll start with Zee Entertainment. So back in October, they had announced that they'll be acquiring 100% stake in 9XM and INX Media. But yesterday with the exchanges, they notified that they will not be able to do it due to certain reasons. Why was it important? Because it helped them widen their music portfolio. Remember, 9X Media has 26% market share in the ad revenues. So that would have been an incremental positive for Zee Entertainment. However, if I see in terms of revenue, it only added 5% to their domestic ad revenue growth and 2% to overall consolidated revenues of Zee Entertainment, but it is a sentimental negative for Zee Entertainment, and expect that stock to be in red. Talking about ENIL and TV Today, well, this was on expected lines. Now, to mark the news, TV Today has decided to sell 3 of its frequencies, that is Mumbai, Delhi and Calcutta, to ENIL. In terms of financials, 9-month FY18, ENIL has, TV Today has been able to do radio business of around 17 crores, but an EBIT loss of around 11 crores. How is it important for ENIL? Is because ENIL already operated those channels through a sales alliance, and I was going through a Motilal report where they said that they expect these 3 stations to garner revenues of around 70 crores in next 3 years, and that would mean 10 to 12% market share for the company. So both these stocks will be in focus today.
Okay, I just want to add, thanks Sonal, Zee, could be actually green, because INX Media is, you don't want to be seen in that company now, considering all the investigations. So I'm not very sure whether Zee will be really depressed because of this.
Okay, we'll find out, of course. But Naveen, what about some other stocks in news?
So I'll begin with quite a few oil and gas companies, beginning with IOC, BPCL as well as GAIL. As we know, the reports have been earlier also suggesting that IOC as well as BPCL will be looking for some stakes in GAIL. Now, reports have been telling us that they are looking at around 26% stake, and the important point to note over here is the deal value will be around 20,000 crore, which is exactly what the current trading price of GAIL is. Also, this will lead to some bit of an integration in the overall space. Also, Viatech Vabag is one stock which will be in focus. Porinju Veliath, who is an influential investor, his equity intelligence, they have upped their stake in the company, and currently the stake is around 5.01%. So some green expected on that stock. On the other hand, Sona Koyo Steering, their promoter JTKET, they have reduced their holding by almost 47 lakh lakh shares in the company. Currently, the company JTKET holds around 14 crore shares in the company. This is as per the company's policy to reduce the promoter holding. Currently, the promoter holding stands at around 77%. Back to you.
Okay, thanks a lot for that. So here's a quick recap now of all the stocks that you guys need to watch out for as we head into trade this morning. Expected to gain are names like HUL, Ashoka Buildcon, PNC Infra, Sadbhav Infra, Fortis, Z Entertainment, ENIL, GAIL and VA Tech Vabag, while stocks that could be under pressure this morning, Adani Enterprises, Axis Bank, Nifty PSU Bank Index and Sona Koyo Steerings. But Paul Krugman, right? I mean, you spoke with him over the weekend, and what were the key highlights there?
Well, a whole host of them, but most importantly, he sees India's services exports not seriously impacted by the current kind of backlash against globalization. He also pointed out that the extreme globalization of the 90s is an aberration. So we shouldn't get too worried about the trade barriers because we may only be mean reverting. So there could be lower trade growth, global trade growth, but India could benefit from the services growth. I don't know what part of the conversation you're going to get presented, but listen, it was all told an extremely enriching conversation. He said that a successful Indian future must include a lot more manufacturing as well, so keep that on board.
We need a China that is a reliable partner, and one-man rule is not how you get reliable partners. You never know what may enter that man's mind. And so this is a bad thing. China needs to make a big transition too. China cannot continue to do its economy the way it did. There are things you can do when you have a huge reserve of underemployed peasants that you can put to work and you can grow at 9 or 10% a year. You can't keep on doing that. You need to adjust. You need to become more mature. The Chinese situation has looked unsustainable for 7 or 8 years. Now, of course, the problem is if maybe the fact that it's gone on so long means that we're wrong about it being unsustainable. Yeah. That could be true, but it still looks as if they have too much investment, too little consumer demand. They keep it afloat with this constant wash of credit. There was a period of capital flight. They cracked down on the capital flight, but it's probably still a lot of pent-up desire of money to get out of China. You know, when one of these days, reality probably will catch up with them, and it's going to be nasty. Modi is clearly a smart guy and a forceful guy, and his economic policy, while it has included some odd things like demonetization, has clearly, on the whole, been an intelligent one. Some things about Modi disturb me. He's a Hindu nationalist. He's in some ways comes across as conservative on issues where I think we need more openness. On the other hand, he's shown himself to be a reasonably innovative, effective economic leader, willing to do stuff. It makes significant investments, especially on behalf of the rural poor.
Okay, we'll take a quick break on that note. But on the other side, let's talk about the here and the now. Our technical experts Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar will join in to give us some technical views.
पूरा करने की दिशा में हम प्रयत्न कर रहे हैं, आगे बढ़ रहे हैं, क्योंकि हमारे प्रधानमंत्री ने भी कहा है कि 2022 आते आते 2022 आते आते हम इस देश के किसानों की आमदनी जस्ट डबल कर देंगे। अब उसमें जस्ट डबल कैसे होगी? इनपुट कास्ट हमको कम करनी पड़ेगी, इनपुट कास्ट कम करनी पड़ेगी, और साथ ही साथ कम से कम जितना भी जो भी इनपुट लगता है, जो भी लागत उसकी लगती है किसान की, उस पर मिनिमम 50% की प्रॉफिट उसे हो, यह इंश्योर करने की जरूरत है, और इस दिशा में हम लोग काम कर रहे हैं।